Today we're going to talk about new stimulus checks, but they're called inflation checks for California. We're going to be talking about mortgage rates, unemployment, recession, all the goodies.
It's been a minute since we've been on. I feel like it's been 3 weeks. We're sorry that we haven't, recorded in a while, but we're back.
We are back. We had a lot of stuff that were going on, a lot of stuff happening. I'm actually leaving to New York. By the time you're watching this, today. I'll probably be in New York later today. Yeah. So
our parents are already out there.
Yeah, they're in New York. I'm going to New York they're going more like vacation. I'm going more for a conference.
And vacation.
Yeah, I mean, yeah, of course.
This is what, your second time in New York?
Yeah, second time in New York.
Well, let us know. A lot of people compare LA and New York, so it'd be interesting to hear, what you think about New York.
Yeah, and last time we were sharing, we had just ordered the new iPhones, and I'll just letting you guys know, we just got them.
So you're officially broke?
No. I'm using my inflation check to pay for this.
We literally pre-ordered them as our last episode, and we finally got them yesterday. So
yeah, it's been a while, but I love it. iPhone 14 Pro Max. It's the best.
It's nice. I've waited 4 years, so it's a huge difference for me.
Yeah, and if you've never watched this before, my name is Josh.
My name is Carlos.
And this is Avance News. Let's get right into it. So, like I mentioned in the very beginning, California will be issuing stimulus checks, but not stimulus. They're called inflation relief checks, which is... when you hear inflation relief checks, it's like, is that supposed to sound dumb? Is that like, what are you talking about? Like, more cash means more inflation. Yeah,
it's just, it looks... Again, it looks very nice on paper, but at the end of the day, printing more money or giving money away for free is not going to really help with reducing or inflation relief. If anything, is going to make it, continue or more. Yeah. It's like, I think one of the main reasons why they're doing this is because they have like abundance amount of money that they got from taxes, basically, Mm-hmm. It's like a business, and we're heading into a downturn. Don't you think it would be smarter instead of, just giving out this money to be like, all right, let's hold on to this because we might hit this crazy recession that everyone's kind of talking about, and it would be nice to have this money to be used for special programs when that happens.
Yeah, for rent relief, for housing, for food, for small business, all those different stuff. Because everyone that's going to get this check, what's going to go to? Gucci, phone,
vacation trip, but it's not $1,000, right?
I'll explain it. So let's get into it. So
people are probably seeing that, like, what? I'm gonna get $1,000?
Most people are, actually. A lot of people are, because number one, you have to be a California resident, okay, and you have to have paid taxes in 2020. Okay, that's the most important thing. You have to fall into the income limits, and they're gonna start sending out these payments by October 7th. So if you're watching, we're very close. We're like
next week.
Less than a week. Yeah, very close. And so you can start receiving.
Is it going to be a direct deposit or kind of like a check?
So it's going to be either direct deposit, or if you've never done direct deposit when you do tax returns or anything like that, it's going to be like a little debit card.
So same thing as the regular stimulus.
Yeah, it's literally the same as a stimulus check, So if you got direct deposit for stimulus check, you're most likely going to get direct deposit for this. So these charts explain and break it down. So all our other individuals are regular people that are single, no dependents, meaning someone like me. So someone like myself, if I make $75,000 or less, I would get $350 without a dependent. Now, if I had one dependent, let's say I had a daughter, a son, someone that was dependent of me, and I write them on my taxes, that's $700.
Someone getting $200?
If you make $75,000 at $125, you only get $250.
That's not our inflation relief.
It's not even. It's like 1 month of gas. Whatever. It's gonna pay my car registration. It's gonna pay my car registration.
It's gonna help with my car insurance for 2 months probably.
Yeah, so it's like
that's hilarious. But they put that out there in the news, like you're up to $1,000.
Because $1,000 is if you make $150,000 or less and you're married, you file your taxes married jointly, and you have one dependent, then you'll get $1,050. Yeah, of course.
So couples.
Which there are a lot of couples. So if you are married and you file your taxes jointly, you're gonna get roughly a little bit over $1,050.
And again, this is tax-free money, right? You're not gonna get taxed on it or anything.
Yeah, it's just like the stimulus checks. It's like I highly recommend you don't go and buy Gucci or Louis Vuitton.
No.
Don't make them rich. Just if you need to pay for bills, use it to pay for bills. But your card registration's gonna come up, pay for that. Your insurance
or pay down debt. Or have this as your safety net, because like we always talk about here in the program that majority of people don't even have $1,000 in their savings. So if you get this $1,050, you're above that. Use this as a reserve. Don't go and spend it. It's like the world that we're living in right now, we're not sure what's going to get into as we're going to talk to in the next topics. So save
that money, like we always say. So, whoops. But yeah, so most of us are probably gonna get anywhere from like $700 to $300, $200, somewhere around there.
And when he announced this, like he announced this like almost like at the beginning of the year.
The beginning of the year, but ironically, they're giving them out right now a month before elections. A month before elections. So strange. Yeah, very strange. Yeah.
Random.
I don't know, but whatever. I'll take the money, but
I wonder if in the same envelope it's going to be like vote for Gavin.
I know.
Register to vote. Yeah.
Yeah. I don't. Whatever.
Instagram's starting to do that, and Twitter. Have you registered to vote?
Oh yeah,
have you
I see
that?
Yeah, I see that. And speaking about recession and all that, there's this article that said, the Fed, which is the bank of the U.S., the Federal Reserve, says that unemployment will rise, right? Because when they're raising interest rates, they're going to cause pain, like Jerome Powell was saying, which can then cause companies to let go of some people, which we're already seeing a lot of companies do. I read an article today that said DocuSign is going to let go 9% of their workers to restructure. Interesting. They want to restructure right now. What an interesting time to restructure, right?
Yeah. To me, I find the most interesting with the Fed is that there's someone, that has a position that can literally be like, you know what? The job market is the best. Everyone's employed. Everyone has a job. But because of the bad habits that we had the prior 2 years of spending, and here's a stimulus check like we talked about in the previous story, is now the demand is so high, and the only because we went to the mall. I was telling you, it was just me, Sammy, and Josh, and my girlfriend, and Dareem, and I was like, it's so packed, and technically we're in a recession. So what does the Fed have to do? He sadly has to force people to lose their jobs, make companies be like, do you really need that extra employer or whatever? So. Yeah, this is crazy that he said pain. Yeah, he has to cause pain, and the only way to bring down demand is firing people.
Yeah. And when we're talking about, people losing jobs, I'm pretty sure it's happening, but we'll talk more about it, right? But what happens is unemployment, right? Unemployment's going to rise. Companies are going to fire people. Who are the first people that they're going to let go? If you're watching, like, okay, great, recession's coming, unemployment's probably going to rise. Am I going to let go? Is my brother going to be let go? Usually, who are the people that get let go? This is what an economist had to say. He said the two most likely people to be let go in companies are the less educated and young workers. Now, when he came to less educated, he said 2 years ago during the pandemic recession, less educated workers suffered far more acute job losses than their better educated peers, according to a study by the New Economic Thinking. In the Great Recession, the unemployment rate for workers with just a high school diploma fell 5.6 compared to those with a college degree fell less than 1%. Now, obviously, we're in a new world compared to the Great Recession. There's a lot of people that don't have a college degree that have secure jobs. So I'm thinking when they say less educated, I'm thinking like not even someone that's doing a trade, like literally someone that's just working at McDonald's, at Amazon warehouse, stuff like that, where it's like it's just a job, just to get by, pay bills, but...
Well, it's probably a lot of jobs or a lot of markets that did really well during 2021, e-commerce and all 2020, that. And now people are back in work. People are looking more to get out of the house to look for more experiences. So, yeah, like a lot of these companies that did really, really good, like we saw all these tech companies, they did really well. They're having to let go, like DocuSign, all these companies that did really well. It's like they're the first ones because it's like we don't really need this. And when is the Great Recession? For those who are wondering, is that the Great Depression or the Great Recession? What is that?
Great Recession was in
2008, right?
Well, the way that I don't know what they meant in the article, but I know technically Great Recession is the 1920s one because the 2008, 2007 was called the GFC, Great Financial Recession. But
that's the first time I read that. Great Recession. Usually they call it a depression.
Yeah, so I don't know if
No, yeah, that was a depression, a recession.
Oh yes.
That's
so
the Great Depression.
Yeah.
So the Great Recession is probably 2008.
Yeah. Usually I see it as the Great Financial Recession. That's right, but
even the depression that we had in the 20s, right? That one only affected 35%. So there's still majority of over 65% of the people living in the U.S. weren't really affected. But 35%, that's huge. And, a lot of people will say, are we heading to not a recession, but a depression? That's where we have to look at ourselves, be like, hey, is my job, recession proof, or am I doing enough in my company that I'm not only just doing what I need to do, but also standing out a little bit, just a little bit?
Yeah, we should put here less educated young workers and quiet quitters. They're the ones to be let go first.
Yeah. Even though we had some comments in our reels, some people were disagreeing with us. Like, hey, if you want to quiet quit, like we said, we have nothing wrong with that. But, you might be affected by this.
Yeah.
Our generation is the first time we're going to face this. 10 years. This the great 2008 crash. Most of us I was still in middle school, I think. So it's like, I don't really know what really happened, so I don't know if my market's going to get affected. You don't know if your market's going to get affected. We don't know.
We really don't know. Yeah. So less educated young workers, it's pretty obvious. If you just got out of college and you don't have much experience, you're most likely going to be let go. A lot of companies are going to probably let go of those people.
Hey, but there's people without a college degree that do, blue collar work, they're traders. trades. They have trades, so they're plumbers, construction.
Those are more recession proof.
Yeah.
Because you're always, no matter what, if you need to do plumbing in the house,
you know what?
You're going to do it.
You know what's another market that hasn't been tested either? Social media influencers. That has never been tested. This whole social media revolution that everyone is making money on YouTube, TikTok, Instagram, even that alone, I see it because I work editing videos, and I can tell some companies are starting to cut off on what they usually would do. So it's interesting. Like, all this new technology has been around the last 10, 20 years. It's going to get tested.
Yeah, a lot of stuff is going to get tested. We really don't know what industry specifically. That's what this article was saying, but I can see why, people like that work at an Amazon warehouse, where they went from 2020 to 2021, there was a boom. Everyone was buying stuff online. But if we enter a recession, they're going to let go a lot of people because they're not going to need as much people to send out packages.
Yeah, well, even like the new iPhone that just came out, they didn't meet the sales that they were expecting. So Apple had to contact wherever they're building their phones and be like, hey, can you guys slow it down? Because we're not selling the number we were expecting. So even that, it's even Apple starting to be like, okay.
It's a snowball effect all across the board. And speaking about recession, so when we talk about, Jerome Powell, this guy right here, he has a lot of power in these hands and these lips right here.
He says one bad word and he says a good word,
this and then his hands, because he signs and he approves stuff with his hands, right? He doesn't tweet stuff, but the Fed could cause a global recession. I want to go briefly into that because you might be thinking, the Federal Reserve is just focused more on the U.S., but it's like it's looking globally. So the Fed has been laser focused on fighting inflation in the U.S. Well, up to now. Before, it was technically transitory. But, countries thousands of miles away, all over the world, I can think of Argentina, Mexico, like countries outside of the U.S., obviously. Their central banks, because our central bank, our Federal Reserve is raising interest rates, they also have to raise interest rates so they can catch up. Because if they don't, the value of the U.S. dollar is going to continue shooting up while their currencies is going to go down. So the World Bank recently cautioned that the risk of global recession in 2023 has risen because there's so many different, just like our bank, our Federal Reserve has said, we almost have to force a recession to raise interest rates. So what's going to happen then? Other countries they're not raising interest rates by 75, 25 basis points. They're raising it by 2, 3, 400 basis points. And now I think there's a country, one of the countries, Argentina, is at like 60%. Most of them are at least at 10% already or more, because they want to compete with the U.S. dollar. I don't know if you guys have seen the U.S. dollar, how strong it is right now.
I don't even think they want to compete, but they have a lot of debt.
No, yeah. They have to compete and they have to catch up because a lot of these countries have a lot of U.S. debt. And as the value of the dollar keeps going up, then the debt obviously keeps going up, especially if they're paying this debt with their own currency that's going down. So it's like, they almost got to catch up. It's like a game of catch up. And basically, like this title says, the dollar is strong. That's good for us, but it's bad for the world. And yeah, like I just mentioned, they're basically trying to catch up. And there is this like country, Sri Lanka. It got so bad that they had to almost like fire their president because they had so much debt.
But they didn't fire. I'm pretty sure everyone saw those videos. They literally stormed the Capitol.
Yeah,
did you see that videos? He was running away to his helicopter with his luggages trying to get in because, they were trying to literally take over their capital. Yeah, it's like we forget that the US dollar is not only our dollar, but it's the whole world's reserve. You know, that's what the strongest value is the dollar. And for the last 10 to 12 years, debt was better than holding cash.
Yeah.
That's a lot of people will make fun of you like, why are you holding cash? It's losing money, blah blah blah. But for the first time in the last 12 years, it's actually those who are savers are actually getting rewarded. That's the story that no one talks about. Is like that's why the past 2 years it felt like everybody was spending. Everybody upgraded their car, upgraded their house, upgraded this, that. You know, they were just spending and spending and spending. But I was doing the opposite because I was listening to certain people. And also there's like a quote, I forgot who. I want to say it's Buffett who said this, is be greedy. Yeah. I mean, be fearful when everyone's greedy, and be greedy when everyone is fearful. And that's how I was the past 2 years. I was paying debt and I was stacking cash while I was looking at my friends getting new cars, updating this and that. I was like, and it felt weird because it felt like everyone's doing this. I should also buy into this trend. But if you are a saver and have been a saver, this is the best type of market for you because your money is growing stronger day by day without you even doing anything.
Yeah, especially as they're going to raise interest rates. That's going to help you. I mean, you could even put it into a simple high yield savings account. It's over 2% at this point. It's over 2%. Yeah, like that's great.
Yeah, we've never been in this type of market for, like I said, 10 to 12 years. So that's why if you're a saver, this is the best type of market. Everyone that told you, oh, cash is dead, you know, gold is going to replace it, Bitcoin's going to replace it. Look what it's done the past year. You know, cash has been number one. You can say the Fed is doing too much harm, but they're actually, you know, in a way protecting the value of the US dollar. That's what they're doing. At the end of the day, they have to protect it. It's like if Apple, you know, the Fed is its own company, the dollar is its product. So they have to do everything in their power. And since they pumped so much money the past 2 years, is everyone forgets we were in a recession. 2020, you saw the stock market, we were in a recession. And what did they do? Boom, dropped interest rates. Here we go, free money. And people it was like we were partying for the past 2 years. So now the best tool to fight inflation, which that's what he says. His biggest fear is inflation just getting out of control, which it is in other countries. So they have to take control, is raise interest rates.
Yeah, raise interest rates. And he said he's going to continue raising interest rates. He's going to cause pain, et cetera, et cetera. So he's literally said, not officially said, that basically by doing this, it's going to lead us into a recession, which a lot of people have already said it's 2023 where it'll happen. Maybe late 2022, but definitely, 22 is almost over.
But I think we need to hit a recession. How many companies do we know that are still around that technically aren't doing that well? You know, they've never had, you need to go through a little shakeup. Imagine if your whole life you were the best soccer player, let's say me because I love playing soccer, and you never had a challenge. My favorite games or my favorite moments were when we were down 2-0, or 3-0, and we were able to go through that downturn and be able to, pick myself up and get better. That made me a better soccer player. Same thing. Our country has to do the same. For the past 2 years, money was too easy. Debt was been too easy for the past 12 years. So we need to. That's why there's a lot of companies that just, even from 2008, that don't need to be there anymore.
Yeah, the biggest thing I can think of is cryptocurrencies and NFTs and especially NFTs.
I believe in crypto, but NFT was the one thing that I just didn't understand. I was like, this makes zero sense.
We'll talk about it right now. Yeah. Too. And then, like I was mentioning right now, the Bank of England, they recently announced, oh, we're going to cut taxes, okay? We're going to cut taxes. And because of that, they were literally going alarms everywhere. They were like, oh my God, we need to start buying bonds. The bank started purchasing bonds, which is for them, it's to increase this money supply and get money back into the banking system. So they're doing the opposite because it was like as if all hell was going loose because it was just really, really bad. They had to buy to calm the markets because a lot of people were getting scared, like, oh my God, they're going to pull all their money out of the financial markets over there. And it was going to cause almost similar to 2008, basically. But the reason I wanted to bring this up, to calm the markets, they started buying bonds, right? And basically inject money into the banking system. I'm like, So if this were to happen in the U.S., would we do the same? So it's like, are we just continuing just putting more band-aids, you know?
Yeah.
So,
I don't think this is going to happen to us. You know, I think the Fed, at the end of the day, he is pretty smart. And because, you know, if he wasn't, he would be doing this.
yeah.
You know, he would be doing this. He'd be like, you know what? Let's go back to low interest rates, you know, pump up the inflation again. You know, at the end of the day, it's better to have higher inflation and people feeling happy, you know, because it feels nice. You know, it feels nice to have that excess amount of money. But then you got to have realization like, wait, some people were getting $4,000 checks for unemployment. You know, we were getting checks almost every other month, 1,500. You know, it was very easy. You know, and it's that time has come to an end.
Yeah, that time has come to an end, and what's the new normal now is 6% interest rates on mortgages, which is not abnormal. We've definitely had 6% interest rates. You know, this chart right here shows. I mean, we got all the way up to past 18% back in the 80s. We're at close to 18%. And the crazy thing is, people still bought homes here. People still bought homes here. They still bought homes here. Still bought them here. They definitely bought them here. A lot of people bought homes here in 2020 and 2021. Or refinance. So a lot of people are sitting on 2-3% interest rates. And as they're going to 6%, you know, people are talking about, is there going to be a housing crash and all that? Honestly, we don't know, because why would anyone in their right mind sell their house if they're at 2 or 3% or refinance? So maybe what would happen is it would just be stagnant, and stock market might go down. No, definitely will go down. Cryptocurrency will keep going down. Tech stocks, NFTs, all that stuff. But I don't know about hard assets like real estate.
It might be different based on location, you know?
Yeah, well, yeah, exactly. Because during 2020, 2021, there was literally places where the houses 3-4x'd because people went and moved over there because remote work and everyone's going back to work. Yeah, definitely. Places like part of Texas, Florida, and stuff like that.
Yeah, so it, you know, is like, will it affect where we live or where you live? I don't know. It just depends on, you know.
Every market's different.
So not every market's going to get affected. But some are. You know, I think some houses are going to drop in some areas. Yeah. I just have no idea where.
We have no idea where. I mean, in 2008, there was markets that the house went up actually during that time.
Yeah, and also in 2008, everybody was saying there's not going to be a crash.
Yeah, that too.
They were making fun of everyone. Everyone was
all the smart people.
Technically, all the smart people. Yeah. They were like, there's not going to be a housing crash. That's insane.
Yeah, so it's like, honestly, we don't know. Like, it kind of feels like not like 2008 because it's too different. If anything, it's more like the 70s, 80s, inflationary, high inflation type stuff, right? But if you look at the charts then, houses went up. Even with 18% interest rates, houses went up like a lot. Stock market was stagnant for 10 years.
Yeah.
So it's like I know history repeats itself, but it's so much different. It wasn't COVID. This was, you know, it's like.
History repeats itself, but not exactly. I think it rhymes, you know, so it won't be exactly like the Great Depression because every time is different, you know, every single time.
Yeah.
That's why if anyone tells you this is going to happen, do this, they're probably lying to you.
Yeah,
you know?
No, I wouldn't listen to anyone that says they know what's going to happen because no one really knows unless you're Michael Burry, right? Then he knows.
Even him, you know, technically he's not right 100% of the time.
No.
Maybe he's right 50 or 75% of the time, you know?
Yeah.
It's still a high percentage.
Yeah. Yeah, like you were saying, a lot of smart people were guessing that 2006, 2007, 2008, nothing was going to happen, right? No, nothing's going to happen, right? These mortgages are fine. Just like right now, people said, no, nothing's going to happen. You know, these mortgages are very secure because a lot of people have equity and we're not lending like we were before, ninja loans.
No, I think everyone who has a home or bought a home recently is super qualified.
Yeah. So very qualified and have most likely a good amount of equity.
Yeah, that's why I don't think it's going to crash.
It's different. Yeah, very
I don't
different.
Think so. Someone was saying based on the mortgage rates that are right now 6.3, that houses to be the same as what they were last year have to drop. Are you going to show that? Have to drop almost 40%. So they could be, you know, almost the same as what they were when interest rates were low. 40% they have to drop. That's a huge number.
Huge. That's huge.
That's what happened in 2008.
And we're not in 2008 too. No. Maybe 10%, maybe 15%, you know. But I just wanted to show you guys like a house here in California, which is, you know, a decent house is $750,000. Like a really, not really nice, take that back. Like a
just
decent
average home.
Average home in like maybe Orange County. $750K. You put 5% down, which is almost $40,000. If you would have bought this house this year, right now, at 6.29, which is the average mortgage rate, it comes out your monthly mortgage is almost $5,500, almost 55.
Are you calculating taxes?
Property taxes, home, blah blah blah, all of that. Yeah, because the principal is just $4,400, but when you include all this stuff, it's $5,500, right? Now, if you would have bought it, let's say like a year ago, it was like not even 2%. This is 3.29, so it's like 3% less. It would be $4,153. So that's almost $1,500 cheaper for the exact same house, same down payment, same home price. Nuts. And during this time, a lot of houses didn't stay the same price. They went up maybe $100,000, but the rate went up. So it's like people are buying the same house probably costs $2,000 or $3,000 more a month.
And just imagine when the interest rates was at 2. People who locked in interest rates around the 2s, you know,
or
they
refinance.
Refinance. You know, they're sitting in a really nice, you know, position that they're not going to sell.
They're not going to sell.
They're gonna just hold on and just wait out the storm. You know.
Why would you sell? No. I don't think we're going to see those type of rates, maybe even ever. You know, maybe we'll see 3 or 4, that's normal, 3 to 4, but 2.75, 2.95, 2.85, nah. And 3 or 4 is not bad.
First time buyers though, they get really low interest rates though, huh? Those programs.
It depends on, you know, the most important thing if you're buying a house is your credit. That's the most important thing. Obviously your income too, but your credit is really going to determine your interest rate. But yeah, so like I was saying, in the 1980s, mortgage rates were at 18% and people still bought homes. In the 90s, rates were 8 to 9%, which is where we're basically headed towards, and people still bought homes.
Gas is going up randomly.
Again.
Gas is
it's going up. I know. It's going up again. We mentioned NFTs and cryptocurrencies
a lot.
So this is 2021. They started to explode, and people are like, I believe in it. This is where Gary Vee posted videos. Yes, do NFTs.
No, trust me. We all were like, what is this stuff?
And then it exploded in January. Oh. Whoops. In January of 2022 of this year, it exploded. The volume of people buying and putting money into the NFTs and all that stuff. It almost hit $20 billion. But look where we're at right now. Literally disappeared almost got wiped out 97% from its peak because people bought these Bored Apes and like, excuse me if I offend you, but I always thought it was stupid. I'm sorry, but I just thought it was this stuff.
It never made sense. I would always take a screenshot and been like,
there you go. You have it. Like I get how it could be used for other stuff, like
it's just a picture.
Like Justin Bieber comes out the song, right, and he's like, oh, I'm gonna have a little deleted one extra song, and I'm only gonna sell 1,000, little NFTs for that extra song, and at $10,000. Okay, people buy it up and they keep it forever. I still have Justin Bieber song from blah blah blah. Yeah. But this, a Bored Ape or like dumb stuff. I literally went to a gallery in Hollywood where they invited me to go check it out. It was just a bunch of weird stuff. I'm like, really?
Those were NFTs?
5 Ethereum. One of them was worth 5 Ethereum, 10 Ethereum.
There were drawings and
a gallery where people were gonna buy them like 2 weeks ago.
Oh man, I wish I would have gone. I would have loved to check that out.
It was.
Yeah. No, to me, during the whole crypto thing, like I believe in crypto. I think the technology of NFTs is smart. Like it's a good tracking system. So just imagine when it comes to cars, like a VIN number, just imagine you as your California ID. If there's a way to use that technology, just like in the .com bubble, everybody had a website. It's the famous one. It's called pets.com. Like everyone had a website. Why? Because they said that's the new thing. And yes, they were right, but not at that time. And a lot of those companies or a lot of businesses that were just .com, they're gone. Poof, you never hear about it again. But there's companies like Amazon, there's companies like Google, Apple, that stuck around. So yeah, this of buying monkey, and stick figures, drawings that look like anyone could have drawn them. There's no purpose to it. Like even Jake Paul posted a picture. I don't know if you saw that he bought an NFT that was around $600,000 and it dropped to like $10. It was like this insane thing. He's like, this is only worth $10. Even him, a lot of people got duped into this. And what I found out was looking into this is a lot of celebrities, the NFT guy that developed, let's say like that monkey figure. I'm not saying that he did that, but he would go to celebrities and be like, hey, can you, I'll give you this for free, just promote it and I'll give you X amount of money. And then the celebrity will post it and all the fans would go in and jump, and then the celebrity would sell his NFT. The founder would sell his NFT, anyone behind the doors. So yeah, I thank goodness I've never fell to the trap. Everyone's telling me you got to buy NFTs, but I'm like, that doesn't make any sense. Like what?
Yeah, no, it sucks because definitely a lot of people lost money.
This is why interest rates have to go up, because this is a bubble that came out of what? During all that stimulus checks that were coming in. It's the last one that we got. Yeah, right, this is where a lot of the money went to. With that's why they say like, oh, we need, like, Gavin is going to give out more money. Why? It's probably going to go to this stuff.
Yeah.
You know?
A lot of people, everyone's an NFT crypto expert, you know? Everyone. Stock market expert, which, that's what caused a lot of these bubbles.
It's easy to make money when everything's going up. When it's going down, that's when the true, real financial or crypto expert really comes out.
Yeah. No, yeah, it's important that, if anything you get out of this is just make sure that you know what you're investing into. Yeah. And does this really have purpose,
And don't FOMO in. If you feel like, if you start getting anxious, just turn it off. Don't listen to that. Do your research. Because if you fear anxiety of how come I'm not participating in this, look, everyone's making money, it's probably a scam.
Yeah. FOMO. Yeah. Fear of missing out. Very important. Don't. Yeah, we talked a lot of good things today. Mortgage rates, NFTs, cryptos. Let us know if anyone watching bought a house with a 6% interest rate. Very curious.
A lot of people did.
A lot of stuff that's your dollar, guys. Your dollar is strong right now. If you go to any other country, usually it's like around 15% stronger. So if you go to there's places where
go to England.
Go to England. Go to Europe. Right now is a good time to go to Europe. The dollar's worth a lot more right now. Yeah. So it's crazy what's happening and there might be a global recession because this guy's lips.
If all the bankers are already saying there isn't 2023, that means we're already in it. Yeah. So anyone that tells you, we're still not in it, if they're already, all the big says, by 2023, that means they're already preparing. And they're just preparing. That means we're technically already in it.
And another indicator is, why are all these big companies forcing people to come back to work so that people quit, or literally laying off 9, 10, 15, 20%, of their people, because maybe they know what's about to happen soon, so.
And gas is going back up. So, at the end of the day, that is a big part of inflation.
That's going to cause them to raise it 100 basis points now, maybe.
Yeah, and we just don't know, we just know what's happening. We're still in a war, even though no one really talks about it, or I feel like everyone kind of forgets. But we're technically still in a war, and it's not looking really good. So it's like all that's going to affect, inflation.
Which, speaking of the war, Biden passed a law passed something for more funding, another $1.1 billion to Ukraine. So, we're still spending money.
Yeah.
Still sending out money.
Hey, we're going to get our student loans forgiven next week.
Yeah. Supposedly, all you got to do is go to the website online. Just look up student loan forgiveness, and there's a .gov. Make sure it's gov, government website. So if you want to receive notification when this is going to happen, you just literally say there, I want to sign up for the newsletter, alert me. I signed up for it, super fast, super easy. And as soon as the application's out, I'm going to apply, and boom.
I'm going to get everything forgiven.
Yeah.
Crazy.
Almost everything.
Really?
Maybe like 2,000 or 3,000. Yeah. 20,000 for
Gavin Newsom needs to give out one more check then.
Yeah, one more check. Yeah, and the last thing I wanted to go over with you guys is, when regards to COVID, the resources are there. If you want to get tested, you can get tested. If you want to do the take-home test, if you want, etc. There's a lot of resources, but this is a good one that I saw online from the Ohio State University. It's called Cope with COVID. The C says, control things you can, not the things you can't. O, open up and share your feelings. P, practice daily stress reduction tactics, including physical activity. E, engage in mindfulness. Be here now. Worry will not help. And then COVID stands for count your blessings daily. Overturn your negative thoughts to positive. Volunteer to help others. Identify helpful supports and resources. Do your part to prevent spread of the virus. I think if we were pushing more of this, a lot more of this, obviously also with the resources available, I think a lot of people would have been in a better place, because COVID not only was it physical, but also up here, a lot of people were affected with what was going on.
Yeah, we were all scared. It was a new thing, and we didn't know what was going on.
Yeah, I really wish, they would have pushed, the CDC, the government in general would have pushed more of this too. because people were scared. You know, I remember one time we went to the airport.
Our mom was scared. You were still working, and she would make you spray down, take off your clothes,
naked,
yeah,
in the garage.
Put your clothes in this bag, spray it down, then walk in and shower immediately. Don't even breathe. So I'll never forget those days. I was like, what the heck is going on? This is weird. Like, and they were saying this is gonna be like this for the rest of our lives. I was like, what? Heck no, this is weird.
I remember I went to the airport and there was this I think people, I don't know from what country, but they all had like literally all masked up, crazy masks. Like they came like literally there was from the movies. It looked like crazy, like a nuclear bomb or something. I'm like, why are they traveling in the first place if they're gonna be like that? Someone accidentally pokes it, boom, there's a hole. There he goes. COVID's inside you.
I think we were there together because remember we were passing through TSA or whatever it was.
They were right there.
And they told him, can you take off your thing so I can identify you? And I remember they had to take off everything. And they were so scared while doing that. I was like, wait, why are you here?
Yeah, it got crazy.
I get it. Like, I completely understand to everyone that got scared, you know. But yeah, we're in a much better place, you know.
Yeah, there's a lot of resources, a lot more knowledge, information on the how to treat, and just a lot more resources. Yeah. We're in a much better place. But we're already 3 years from when it first started. About to be 3 years. Crazy. If you want to contact us, here's all information is basically here. Avance Latino. Look us up. Look us up on LinkedIn, Instagram, TikTok, Facebook, YouTube, and Gmail. We're trying to be as active as possible on all of these platforms. Actually, for the most part.
TikTok and Instagram a lot. YouTube.
TikTok, all of them. Yeah,
and Facebook.
Yeah, and LinkedIn too. I'm always posting on the stuff we're doing basically on there. But yeah, if you want to know more about it.
Do you have an upcoming workshop?
The only thing that's coming up is on October 15th. We are having a youth financial literacy event. If you have any young people ages 12 and up, they want to learn about finances, it's going to be really fun. There's going to be prizes, bike giveaways, there's going to be lunch provided. Saturday, October 15th from 10 a.m. to 2 p.m. If you want more information, contact us. Thank you, everybody, for watching today. My name is Josh again, and have a great rest of your day.
Good night.